It takes us to our talk of the tape, a question many investors are grappling with right now. Is it time to be sold on this bull market or still skeptical of it? Liz Young is SoFi's head of investment strategy, here with me with the answer at Post 9.
I hope.
What are you? Are you sold on it yet, or are you still skeptical of it?
I've been skeptical the whole way up, and people have been angry with me for it.
Change.
So, yeah, well, I haven't changed my mind yet. I mean, I certainly haven't changed it now in the sense of we've run up really, really far, and we've got valuations at extended levels by any measure. You can look at it over a historical measure. You can look at it currently. It looks very extended, particularly in tech in those growthy areas. However, Tom Lee made the call last week. We still had more room to run. He was right. I think we still can keep going until there's a reason not to. I do think there's going to be a reason not to. Obviously, next week is a big week with the Fed. Could be their last hike. I'm still not entirely sold that they're going to hike, but we've now entered a period where we're either done with hikes, we've got this new era of monetary policy where we're high and hold, and stocks have to be able to grapple with that.
So I think, the idea of whether the Fed's going to hike in July, most people think that that's a foregone conclusion, including Marko Kolanovic, the guy we follow over at J.P. Morgan, Global Market Strategy. He just put out a note a few moments ago. While we still see the Fed hiking at the July meeting, the downside CPI surprise, he says, means a narrow path to a soft landing is modestly wider. Now, he goes on to talk about stocks. We disagree. Continue to think a recession's the most likely scenario in terms of the view that some would suggest we're in the middle innings rather than the end of the cycle. He says further, they have a defensive stance on risk assets such as equities and credit. So he's not willing to be sold, I guess, to our question on the rally itself, but does admit there maybe is a wider path to a soft landing. If there is, does that make you more optimistic about where we could go?
Well, optimistic in the sense that it doesn't have to be some kind of terrible, catastrophic recession, but it does have to be something, in my view, that resets the business cycle. And I do think that we are pretty decidedly late cycle. And the way that inflation has come down, the fact that we are probably ending a hiking cycle, most of the indicators would tell you that we're late cycle. And even some of the stock market behavior with large caps leading would tell you that we're late cycle. So in order to come out of that, you usually do need some type of a contraction. Now, the degree of the contraction, I don't know what that has to be. Maybe it doesn't have to be that big, prolonged, or deep. I also think the tricky part for investors is that I don't say this stuff to paint with a broad brush and say that every single index has to go down with the same veracity and speed. It could be that the NASDAQ already bottomed, and maybe the S&P and Dow are going to go down more this next time. But I do think that a pullback is in order.
Why do we have to be late cycle? Why is that? Why is that the case?
Well, I think the indicators, when you look at just thinking about what late cycle is, right? You have early expansion, the economy's heating up. And then usually what happens is you get to mid-expansion, which is kind of the sweet spot. If we could just live in mid-cycle, it'd be great. Late cycle is usually that the economy has overheated. That causes inflation, so demand has outstripped supply. In this case, part of it was a supply problem, but in any event, demand outstrips supply. You overheat as an economy. The Fed has to come in and try to cool it down and get it back down to a speed that's comfortable.
Yeah, but what if we're in a sweet spot, though? What if we're in terms of where the economy is, where the labor market is, where inflation now is, and that the reads on what historically would suggest you would be right are being misread because of where we were from the beginning? It's not like the economy was super overheated to get inflation to where it was. We had supply shocks.
Sure.
You can certainly there are people who will make the argument that we overstimulated an already pretty good economy, et cetera. But on the backside of a pandemic, maybe we're just looking at things the wrong way.
If we don't use the word overheated, it was pretty imbalanced, right? And it caused the effect of inflation becoming an issue. The indicators that I'm talking about, it's not necessarily a matter of reading them the wrong way. Just mathematically, that's what they're saying, right? Things like yield curve inversions, manufacturing PMI in contraction for a long time, leading economic indicators, which includes the S&P 500 as a component, leading economic indicators over a 6-month period down 8.4%. It's never gotten worse than 3% without a recession to follow. And the fact that we are probably ending a hiking cycle, that's pretty late cycle behavior as well. So I don't think we're in a sweet spot. You wouldn't have those sort of negative leading indicators and even some of the concurrent indicators if we were in a sweet spot.